You're doing a great job. Keep up the good work. We're learning Elliott waves, the psychology of the markets, what most people just don't know. Either they don't take the time, they don't believe in it, or they just don't know it exists. The fact that you know it exists and you're taking the time to learn it is going to give you an edge, and that's going to pay dividends long term. So today we're going to cover the 3 Elliott wave rules for an impulsive sequence. 3 rules that we're going to abide by, and this is going to give us really important information to make our wave count a bit more accurate, a lot more accurate in fact. So the 3 rules. So this is for impulsive sequence, meaning 1, 2, 3, 4, 5. The 3 rules are, so we know that it's a 1, 2, 3, 4, 5, ABC. This is our typical foundation. We get it. You know, this is the typical Elliott wave. Let's just pull up mine later. 1, 2, 3, 4, 5, ABC. So that's the foundation. So rule number 1, wave 2, which is this wave down here. This wave down here. Wave 2 cannot retrace past the beginning of wave 1. It means when this is pulling back, which is a correction of the impulse, it should not go beyond this point. So make that really, really clear. Wave 2 cannot retrace past the beginning of wave 1. Really, really important rule. If it does that, it invalidates the wave count. It means our opinion of the market needs to change. We need to reevaluate. Rule number 2, wave 3 cannot be the shortest of wave 1, 3, and 5. So we've got wave 1, we got wave 3, and we got wave 5. They're the main impulsive waves. We saw in the last lesson that either wave 3 or wave 5 will be the longest wave. More common it's wave 3, but in crypto and commodity markets, it tends to be wave 5. But the rule here is wave 3 can never be the shortest of wave 1, 3, and 5. More often than not, wave 1 is the shortest, and then wave 1 will mirror wave 5. But wave 3 cannot be the shortest. If we are doing our analysis and the market's unfolding and wave 3 looks like it's the shortest, it probably means our wave count is incorrect and we need to reevaluate the market. Really, really important. So that's wave 3 over here. Third rule of the 3 rules, wave 4 cannot trade below wave 1. What do I mean by wave 1? Well, the peak of wave 1, especially closing day data. Because you have price ranges within a day, but then the price closes, and we normally use American time, price US time, Eastern Standard Time, I believe it is. But the peak of wave 1, wave 4 should not close in the range of wave 1. That's this solid blue line here. If it does, it will invalidate the wave count. We need to reevaluate because the psychology, it was just shown when they studied it, this was one of the most common things. So wave 4 cannot trade below wave 1. If any of these rules are violated, if they're broken, the wave structure as labeled is incorrect and must be reevaluated. So the idea is with Elliott wave, this whole analysis, and the technical analysis as a whole, it's about probabilities and getting the probability in your favor. We want to be certain, but we're not certain to the point of we're not open to being wrong. And it's not about being right or wrong, because at the time of making a decision, you just have to go with the information that's available. So we may believe the wave count is something, but then one of the waves, let's just say wave 2, we believe this is a wave 1, and then we believe this is a wave 2. Let's say it was breaking down to a perfect ABC, but it just continued going down, 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 and went below this point. It invalidates the rule number 1. So then we just need to reevaluate. So we've got a strong opinion of the market, but we're flexible enough, like any great business individual is flexible enough to go, okay, doesn't seem to be the case, let's pivot. What does the market look like? Yeah, so if any of these rules are violated, the wave structure as labeled is incorrect and must be reevaluated. A lot of people, I've seen them before, try and stick to the wave count because, I don't know, they got some pride that they want to be right. Hey, look, even when my YouTube followers and subscribers, you may be one of them, you know, say, hey, Jagir, that wave count, you were wrong about that one, wasn't you? Because it's not about being right or wrong. At the time of doing the analysis, we have objective information and we're looking to make high probability decisions. And remember, only 50% of the time that the information is going to be very evident, but also remember the best investors in the world, you know, are wrong more than 50% of the time, but they make a lot of money. Why? Because when you're wrong, you want to make a small profit or break even, or have a small loss, minimize your losses. And when you're right, you want to make massive gains. And that's the whole idea with probabilities. So there you have it. You got the 4 rules. Let's just recap. Sorry, 3 rules. 3 rules. Wave 1 cannot retrace past the beginning of wave 1. So that's down here. Wave 3 cannot be the shortest out of wave 1, 3, and 5. And wave 4 cannot trade, especially cannot close in the range of wave 1. Any of them are violated, we need to reevaluate. What's up next? Well, first of all, you're doing great. We're learning about impulsive waves and we're also learning about corrections. And typically a minimum correction is A, B, C, which is 3 waves. But there's actually 4 types of corrections. But to be totally honest, there's loads of types of corrections. But the ones that are practical and most common is the A, B, C type of correction. Then anything other than that is a complex correction, which doesn't give us valuable information. We need to be aware of it, but we just don't know. It's not easy to determine the end of a complex correction, whereas ABC, but there's 4 types of ABC corrections. That's what we're going to cover next. We're going to break them down one by one because it's important to know. It's a bit more advanced now. We're getting a bit more advanced. You're doing a great job. You're getting a real foundation underneath your belt, but now we can go a bit more advanced of the 4 types of ABC corrections, because when you see them unfold, some are more typical than others, but it allows you to make objective decisions with the market so you can see what's likely to happen, what's the flavor, what's the feel of the whole psychology of that market, whether it's Bitcoin, whether it's Uniswap, whether it's PancakeSwap, could be any of the top 100, top 1,000 coins. It applies to large market caps, but it also applies to small market caps as well with the projects itself. So good work, keep it up, keep taking notes, keep learning, rephrase, keep looping as well. Repetition is the mother of all skill. I will see you next, where we're going to cover the 4 types of ABC corrections.